Hey folks, welcome back to the weekly market summary. This is a brief look at what we are going to be looking at trading and what we believe is going to be moving the markets this coming week. Today is Sunday evening. It's November the 7th, 8 p.m. Mountain Time. Hopefully you guys all got your clocks locked into the new time zone, and hopefully that is not too depressing for you. I always prefer to spring forward rather than fall back. But here we are with the weekly market summary as we kick off a new trading week. I do want to talk a little bit about the technical indicators that we look at. First of all, we do look at essentially 12 technical indicators along with a dual overlay of simple and exponential moving averages, all the way overlaid from a 5-day moving average all the way out to a 200-day moving average. And we look at all kinds of pivot points, primarily the Fibonacci's and the classics, to give us sort of support and resistance areas in the market, as well as a sort of directional bias. And everything that we're still continuing to look at, if we look at a daily chart, gives us a strong buy signal in the marketplace. Although you will notice that a lot of these technical indicators that we watch and look at are signaling a lot less volatility and a lot of overbought positions, sort of signaling that maybe we might be getting to an inflection point here in the marketplace. Of course, that remains to be seen. We'll see what tomorrow morning brings. I'm looking at the futures markets right now here on Sunday evening. The E-minis are down 10. The NASDAQ is down almost 70 points, and the Russell is basically flat. So we'll see what that brings for the market open. But one of the things that I had shared with our live trading room Friday of last week was Mr. McClellan here, obviously of the McClellan oscillator fame, and someone that I value in terms of his opinion on the market, technically speaking. Talked about three things that he was looking for to see about a potential divergence in the marketplace, to sort of be able to look at when and if this rally is going to be exhausted. And we know that all rallies exhaust at some point. The question is just when. And the three things that he was looking at was, number one, a continuing move up in the marketplace with the VIX, or the volatility index, following as long as well. Usually you have that divergence where the market's going up and the VIX is getting smashed to the downside. We had an interesting correlation at the very, very end of last week's trading session, Friday's trading session, where finally the market was going up into the close, and the VIX, which was getting absolutely crushed once again, turned around and started to come up as well. I don't know if that is the signal that we're looking for, but it is interesting that it hasn't really happened in this retracement back up to these all-time highs that we've had since hitting a low of maybe a 5-6% drop in the marketplace. We've obviously rebounded strongly from that. But it was interesting to see that in Friday's market situation. Number two was a continuing move up in the marketplace with a divergence in the RSI going down. Getting there slowly right now, where we're starting to see a little bit of a divergence there with the RSI. More pronounced in his number three area, where he's looking for a divergence between the S&P and the advanced decline line. We had talked about this a lot in the previous downturn that we had in the marketplace, where I had said for probably 2 weeks before the market had turned down that we were in a more of a bearish stance, even though the market indexes were going up every single day. And that's because the market indexes are cap weighted. And really there's just a handful of stocks, primarily in the NASDAQ, but also in the S&P, that can move that whole index. So while the index was moving higher, the advanced decline line was moving lower. And so these are the canaries in the coal mine that we're sort of looking for. I don't know if we're there, folks. I don't know if we've topped in the markets yet, and we're looking for a little bit of a breather or a retracement. But it sure looks like we're getting a lot closer. So we'll see how that pans out going forward. Let's go ahead and jump into our positions right now. Let's talk a little bit about what we're looking for on the upcoming week here, and then we'll get into some of our current positions and talk about them. So news items. Number one, Monday, tomorrow, the 8th of November, we've got Fed speak all morning long. So all morning long, we're going to have the Fed, multiple members of the Fed speaking throughout the morning session. We also, of course, have our 0 DTE that we're going to be looking to work on Monday, as well as 3 of our 4 DTE trades that we are continuing to work here, both in the Qs, the Russells, and the SPYs. We'll look at those shortly. Earnings trades set up for Monday. We've got AMC and we've got Lemonade. Both of those are reporting after the bell on Monday, and we will take a look at both of those on Monday. see if we can put a potential trade together. Coming up Tuesday, we've got in the news front, we've got the PPI numbers and Powell, both speaking before the cash open. So both of those news items will be potentially something that could move the market on Tuesday. From an earnings standpoint, the big one for us is Coinbase. Coinbase, which is a trade that we have a position in, is going to be reporting earnings after the bell, as well as DoorDash. So both of those will be earnings trades that we're going to be looking at positioning around on Tuesday. On Wednesday, we have the initial jobless claims coming out, as well as the CPI numbers about 1 hour before the cash market open. And then from an earnings standpoint, we do have both Wish. Well, it's going to be primarily, I think, Wish. WIS is the ticker symbol. WISH is the ticker symbol that we will be looking at after the bell reporting. And then, of course, on Wednesday, we do have the 0 DTE that we will be looking at, as well as 1 hour into the cash open. We've got the crude oil numbers coming out. We do have a crude oil trade going on right now. We actually have two overlaid crude oil trades going on right now that we'll look at here in just a second. We'll talk about how we're going to manage those going into Wednesday's numbers. And then Thursday on the news front, we have all of our commodity trades that we are trading, announcing their sales numbers. We've got wheat, soybean, and corn all reporting their sales numbers 1 hour prior to the cash open. And then on Friday, from a news standpoint, we do have the University of Michigan sentiment numbers coming out about an hour and a half after the cash open. And of course, on Friday, we do have a 0 DTE plan for the day. We had a tremendously successful 0 DTE trade this past Friday on NVIDIA, of all things. It wasn't an index. It was on an actual underlying equity. And we may look for opportunities to do that again this week on Friday, looking at those 0 DTE opportunities. We'll just see what we can find. But it ended up being a very nice trade for us in terms of comparing it side by side with the index trade, with maybe an S&P SPX 0 DTE. The risk reward ratio and the ROI potential on that trade was a lot more favorable, I felt, than the index itself, and it ended up being a nice trade for us. Let's go ahead and let's jump in quickly to our positions. Take a look at them here quickly. And we can talk about them. So we did just this evening, Sunday evening here, we put on a new version of our yen trade here. This was a trade that was just tremendously successful for us over the last couple of weeks. Just an absolute home run from an ROI standpoint. I redid my version of this yen trade today with the new expiration cycle. So this expires on December 3rd. It's 26 days out. And it's basically just a wheel trade at this point. It's just a cash secured put trade. Each one of these contracts would put me in position to put up about $2,000 of margin to own that long yen contract. So it's about ultimately a $6,000 trade, but about $4,900 right now, just the margin requirement on it. If we did get exercised, that would be great. I would love to own the yen down here at this price. If we don't, again, the ROI potential on the trade is just absolutely fabulous. We have a position in Microsoft, which expires this coming week. And if you look at Microsoft, again, we could use a little bit of help here in the marketplace to come down. Again, I'm looking at the NASDAQ futures right now, down almost 70 points right now. We'll see how that translates, obviously, into the cash open tomorrow morning. But we do see on all of the technicals that we're looking at here on Microsoft SFT, the ticker symbol on it, that we are a little bit overextended here. It doesn't mean it can't continue to be more overextended, but it looks pretty good right now from a technical standpoint that we might be able to get a little bit of a pullback here on that. So we'll continue to watch that here as the week develops, and maybe pepper in a little bit more on the put side on this to see if we can help that trade out a little bit. Our BTCM trade looks really good right now. We've still got 12 days to go on that. That's a credit strangle. That's an undefined risk trade. And the ROI potential on that was really good, much better than a 10%, maybe almost a 12, 13% ROI potential on that trade. We do still have 12 days to go in that trade, and it's starting to really come into its own right now and start to work for us and get us in the right direction. Tesla is a trade that we've been working quite a bit. We had quite a bit of success with our Tesla trades this past week. We had two or three, well, two, I guess. We had two different iterations, two different versions of our Tesla trade going on last week that both expired fully profitable for us. We've got this version right here going on that goes out 19 days. We're short the 1100 strike calls and we're at 1220 right now on Tesla. It looks like it's going to open up right now down just a little bit. The big news, of course, on Tesla is the Elon Musk tweets going out. And we'll see if we can, let me see if I can pull that up here. We'll take a look at that. No, that's our brokerage account. Here we go. The Elon Musk tweets right here going out. And basically him putting up a Twitter poll as to whether or not the Twitter universe thought that he should sell 10% of his holdings or some of his stock. The reality really is, and I think this story on CNBC drives it home, is that he does have some options that he needs to exercise, and the tax bill on that would be about $15 billion. Now, here's the thing. It's kind of interesting. Elon Musk is technically the richest person in the world, but he really doesn't have that much money. Now, he's probably got a whole lot more money than you or I, but in relative terms, he doesn't have a lot of cash. He certainly doesn't have $15 billion in cash to pay that tax bill. So the reality is that regardless of how he wants to couch this, he's probably going to be forced, whether he wants to or not, he's probably going to be forced to sell some of those shares. And I think that that's going to be good for our Tesla trade, and we'll be able to continue to cash flow that going forward. We have what has essentially now, it was an earnings trade, it was a volatility crush trade on Peloton. Back when Peloton was, oh boy, almost $90 a share, $85, $90 a share, and now we're down to $55 a share. We are in at the $60 strike price put on that. We could very, very easily roll this to the $55 level. The question is really twofold on Peloton, and I think that the jury is still out on this. We don't really know at this point yet. We hopefully will get a little bit better idea this week after 3 or 4 days of trading now after the earnings announcement has come out, which was, by the way, absolutely horrible, is what is really Peloton worth at this point. And we just don't really know at this point where the bottom on this stock is. But we do have the ability to continue to adjust this trade. And so I think that if you look at Peloton, one of the things that I think gives me probably the most excitement. Let's get Peloton up here. One of the things I think that is most interesting, let's go out 12 days and take a look at it here, is just the IV. The IV is still in the stock. Now we're after market hours here right now, but you can see that we're still about 85% on the IV for Peloton, and that's the real key thing, is that we can still get some really pretty good premiums on working this. And so I want to continue to look at working that as we go forward here. And obviously, as I said, I think we'll get a little bit better idea this week going forward what the numbers are going to look like on Peloton. BKKT is another undefined risk trade. It is a credit strangle trade. It had some pretty good ROI potential, and I only put we only have $500 in this. I only did one contract on this, and it's the call side of it up here. Oh, excuse me, it's not an undefined risk trade. It is a credit spread up here on the call side. And it looks pretty good right now with just 5 days to go. This is about a 98% probability of success trade. It'd be about a 5% return for about the week or so that we've been in it. So high probability trade, good ROI on the trade as well. We have a wheel trade going on with Viacom down at the $35 level. It's just 1 week left to go in this. Don't know if we'll be exercised on that or not, but either way, I would be happy with that. It is a good ROI trade, about 5% return on that for the week if we don't get assigned. And if we do get assigned, we'll pick up 100 shares at $35 a share with that $30 of income coming in, or 32 cents a share coming in. So it would be about $34 and 60, 70 cents would be our net cost in that. I'd be interested in picking up 100 shares of Viacom down there. Same story with our Jamia trade. We got just 5 days to go in that. 1750 is our assigned strike price potential down there. I don't know if we're going to get down there, but I would be interested in owning Jamia down there. And also very, very nice ROI on that. About a 5% or so ROI on that trade also. Our Zillow trade continues to look really, really good right here. We do have quite a ways to go in that. We've got 26 days to go in that, but right now that looks really strong. I did want to give that a little bit of time this week to work and see kind of, again, just a little bit like Peloton, kind of where Zillow finds its footing here. We've laddered the call side of this trade to give us some flexibility to be able to manipulate that a little bit more and maybe even extract a little bit higher profit potential out of this trade, although the profit potential in it right now is just absolutely gangbusters. I'm really, really happy with the potential there. Crocs has been a stock that has continued to creep up on us here. We've been able to stay ahead of it by adjusting and rolling our call legs out here. But I think that we're finally in a good position there. We do have a couple iterations going on here. We've got a 40-day iteration and then this 12-day iteration. The 12-day segment of the trade only has a put leg in right now, and so we would like to get a call leg in on that side this week coming up. We did initiate last week some commodity trades. We've got a corn trade and a wheat trade going on right here. Our corn trade looks pretty good. It's got 19 days to go. Just has a call side in on that, and we're going to look this week to see if we can get a put side in on that. On the wheat trade, we did get a full iron condor in both the put and the call side, and that's looking really good. Of course, the wheat trades always give us one of our best ROIs, best bang for our bucks. Just under $1,000 in the trade with $300 of gross income coming in on the trade. One of our wheel trades is our SPY trade, and we'll see where the market opens up here tomorrow. Again, I'm just watching the futures, and they still continue to sort of stay a little bit hit right here going into this evening. We'll see how the Asian and European markets open up and how those affect those. I think that's a little bit more important than where we're at right now. But for right now, it looks like we're okay on our SPY trade and don't need to do any further adjustments there. We'll see obviously how we open up tomorrow. Coin is a big one for us. As I mentioned, Coin is reporting earnings here on November 9th after the bell. And Coin is one of those situations where it's obviously driven quite extensively from Bitcoin right here. And you can see what Bitcoin has been doing. We're not quite at these all-time highs back up here again of Bitcoin, but we're very, very close. So Bitcoin has been very, very strong here. That's obviously been reflected in Coin's pricing. We do have the earnings coming out. Earnings should be good for Coin. And so we want to kind of watch that here. We only have a call leg in right now, and we did really, really well on our Coin trade last week, bringing in quite a bit of income. We'd like to see that happen once again here this week, continuing to bring in. I think our goal was around $700 or so a week was the income goal on our Coin trade. And so we'll see how we can position that this week. It's going to be a little bit trickier this week with earnings coming out, but we'll try to position around that maybe after the earnings report, see what that gives us, and then go from there. We've got our Q trade, which is our 4DTE. That is, I think, okay position-wise here based on what we're seeing in the pre-market here in the futures market. But again, that we've got a long way to go today and get to tonight to get through the European market opening and the Asian market opening and get in tomorrow's cash open to see where the NASDAQ really goes. But I do think that if we look at the NASDAQ and we look at this almost parabolic move here that we have had, we go back here to what, this was October the 22nd, and then really just almost 2 weeks of just an absolute rip your face off rally. And we're finally starting to see a little bit of a pause here. You're seeing your stochastics in the incredibly high overbought range and not quite hooking there and giving us a sell signal, but really close, really close. It'll be interesting to see what Monday brings. But I think that we may be fine there and not need to do any repositioning there. There's obviously a lot of income potential there. I've got about $3,200 in the trade with about $800 of income coming in. Sort of a similar situation with the Russell. The Russell of all three of our indices has been the one with the biggest rip your face off rally, and it really shows no sign of abatement, even though it is so high in the both upper Bollinger Band range here, pushing through the top Bollinger Band range, which is usually always a good indication that we are due for a pullback, but also the technical indicators as well. But we'll see, again, how tomorrow brings the market to us. Right now, as I say, we've got I'm looking at the S&P futures down a decent amount. The NASDAQ futures down a pretty good amount. Russell is basically just flat. So it's continuing to show a lot of that strength there. You know, we'll see what that brings next week as we get through the week here. But we do have just tomorrow to make an adjustment here. So one way or another, we're going to be working on the Russell trade tomorrow. I do have the E-mini position that I've been cash flowing to the tune of about $1,500 a week. I was able to do a little bit better than that last week. I think I brought in about $1,750 or so in income off of my short E-mini position. I'm going to do a separate video here either tonight or early tomorrow morning to talk a little bit about that process of cash flowing it. So we'll look at that. And then nat gas position. Nat gas position is continuing to do quite well for me. There's a lot of profit potential still left in this. Not only is there 15,000 of extrinsic value there in that, but it has, if you look at just the charting of it here, let's pull back here for just a little bit, see if we can get a little bit better angle. You can see really I've got some decent potential all the way down here to around 460 or so on the chart. And that could be almost a $40,000 profit potential there. I don't think that we're going to get down there in this iteration, in this cycle, but we'll see how that goes. But again, I'll keep working that, and then the E-mini position, I'm going to keep working that as well. Looking again, my goal is to bring in about $1,500 a week from that, and the reason that I want to make a little bit of a separate video for that is I want to talk about this margin requirement right here. You guys know that one of the key mathematical components to calculating your ROI is how much money you put into a trade, right? If you put $10,000 into a trade and you make $1,000, that's a 10% ROI. But if you only put $1,000 into a trade and you make $1,000 profit back, well, that's a 100% ROI, right? You made the same amount of money. You made the same dollar profit, but your ROI can vary dramatically just depending how much, or in some cases how little, of your own capital you have to put into the trade. So I'm going to do a little trick that we have been doing over the last couple weeks on my short E-mini position that has reduced my capital requirement here from about $12,500 on this short E-mini position down to just about $3,000 or $4,000. And of course, if I can bring in $1,500 a week of income off of a $3,000 or a $4,000 capital commitment, that's obviously a lot better than bringing in $1,500 of income off of a $15,500 capital commitment. So I will be doing a little bit different or a little separate video on that to go through that. So that's our overview for the week, guys. We've got a busy day pretty much every single day of the week coming up. We'll see you guys in the live trading room bright and early in our live Zoom session tomorrow morning, Monday morning. See ya.